We will now look at accounting information system. Apart from the standards, we should have an understanding that accounting is the basic provider of financial information. Let's now look how this works. We say that financial information comes from transactions, and accounting is aimed to collect all the data which is setting into this system and will provide us with financial reports and financial statements as the result, as an output of this system. So we will say that financial information will be provided based on accounting system to the managers, to the owners, so that they can make any business decisions. Accounting will comprise of different types. And as we can see here on this slide, there will be two basic types of accounting: managerial and financial. Now, those two types will use the same data, but will be oriented at different users. As you can see, in the case of managerial accounting, there will be basically cost accounting. The basic concentration will be on cost accounting and the decision making. In terms of financial accounting, and this is actually where we are looking at financial statements, at the standards and so on, this will consist of basic financial statements preparation. The basic aim will be to provide information for putting those into financial statements, such as profit and loss account, balance sheet, and cash flow statement. We will have a look at these financial statements in more detailed way later on, but let's now try to understand that these two types of accounting will serve different aims. In case of managerial accounting, we will be primarily concentrated at costs and at decision making. And this type of accounting does not have any standard, which means that it is not a regulated area from the outside. The only regulation which is available here exists inside of the company. So managerial type of accounting, this is something which happens inside of the company, and the reports which are provided as the result of such type of accounting will be used primarily by internal users. Now, in terms of financial accounting, this is where we are looking at IFRS and at any other standards and standardizations and regulations which provide us with rules and with principles that we should follow. But of course, for the financial statements, we can say that those will be used as by the external users as well as by the internal users. Now, financial accounting will provide information also to managers who will use income and earnings for the period, sales, available cash, production costs, and so on and so forth, in order to make their decisions. And here you can see the spheres of the decisions which are supported by financial accounting to managers. They will help those to analyze performance and position of the company, which means the overall picture, that will get the overall picture of financial results, of financial performance. This will be also helpful to make appropriate, to undertake appropriate measures to improve the results of the company, to have a look whether there is sufficiency of cash in order to pay dividends to the stockholders, and pricing decisions will be supported by financial information as well. As for the employees, you know those are internal users of accounting information. And in these terms, we can say that employees are also using financial information generated by accounting information system. Now, what kind of information will employees be interested in? As you can see here, primarily there will be profit for the period and salaries which are paid to the employees. Now you can now think about the purposes. Why do employees need such kind of information? First of all, they will be concerned about their job security, and they will need to consider, they will need some how to make decisions about staying in this company or looking for another job. And financial position of the company will be information about the financial position of the company will be a driver to make such a decision. As for the owners, those are also internal users of financial information from the view of accounting information system. Now you can see what type of information owners are usually looking for when looking at accounting financial statements. This will be profit or income. Of course, owners should be aware on how company did last year, for example, or last period. What resources or what assets do they have? What do they own? As well as how much do they owe to other parties in terms of liabilities. Now, as you can see here, the decisions which are supported by this information are additional investments, considerations about additional investments, about expanding the business, and it is very important that owners have understanding whether they have sufficient resources and sufficient cash to expand their business. And in case if no, should they borrow funds, additional funds, in order to support their plans, their future plans. And here you can see the overall picture of the users of financial information in terms of internal and external ones. As for the internal, we have looked at the management and employees. As for the external, we can list here advisors, analysts who provide consultations, lenders, customers, government, because they need, and tax authorities, because they need to know how many taxes will company pay, and public. Now, from the perspective of the users, let's think about the next. How users can influence accounting, if they can. What if accounting is targeted at government and tax authorities? How this will transform our statements, our presentation? What if accounting will serve mainly for internal users? These questions have been asked for decades and have been discussed. Finally, the decision was made that financial information and financial statements should be oriented at external users and at the investors more than at other types of users, such as government or owners. As you know now, the system and our life is changing, and there are advances in cyber-physical systems. There are crucial changes that affect the speed, the space, and economic value of businesses. And in these terms, accounting is not an exclusion. Technologies influenced accounting as well. Currently, most of the companies use computers or, let's say, databases to collect and to present financial information. And here is the point where GIGO rule works. Now, What does this rule stand for? Basically, this refers to the quality of the information, which namely means that if you put garbage in, you will get garbage out. This affects the quality of data which should be gathered in order to get quality reports at the end of the accounting process. We will now look with you at debits and credits and at the accounts which will collect the data and then will be represented in form of financial statements.